China's average per capita milk consumption is more than 38 kilograms a year, and the high demand is having an environmental impact, because every 1 kilogram of a dairy item produced can create more than 12 kilograms of carbon emissions. The carbon impact of dairy butter can be more than 3.5 times that of its plant-based equivalents. To better control its carbon emissions as China pursues the target of reaching carbon neutrality by 2060, Chinese dairy giant Mengniu this May issued a 2.3 billion Hong Kong dollar 5-year green bond, the first green financing in China's dairy industry. The proceeds will be specifically used for the production of organic products and to improve the company's energy and water-saving capabilities.
In the context of accelerated green transformation of the global economy, institutional investors have higher requirements for the companies themselves and the financing instruments they issue. During the formation of this syndicate, many major Chinese and foreign banks expressed their interest to participate in the loan, reflecting that capital market has high evaluation and recognition of our company and this green financing project. It has helped us build a positive corporate image and show our persistence on green and sustainable development to the industry and also to the world, and bring more positive influence to our company in the capital market.
The company received a lot of support from banks in terms of the advice and guidance given to help it form and certify its green finance framework. Citibank was one of them.
There's no specific definition for the ESG product to have a specific cut of the cost or the interest rate, etc. But because you have more investors interested in these instruments, so naturally there's a demand-supply play. There's more demand, and you have only limited supply of green instruments. Naturally, the interest cost would be lower. So generally, we see that in the green bond issuance, there's at least 10 to 15 basis points deduction from the interest rate. That's a benefit for the issuer.
During the first half of this year, the bank raised more than $26.5 billion for Asia-Pacific clients in support of their sustainable financing needs, more than quadruple last year's figure. Chinese companies accounted for 32% of that.
There's more and more pressure from investor side. More investors, they want to invest more in ESG debt instruments. And for most of the PE funds, hedge funds, they also set target for them to hold a certain percentage of ESG in their portfolio. So that has come to a bigger component or trend for China corporate, especially for their overseas financing.
Citibank is far from alone with its ESG policies. China Development Bank now has a green loan balance of over 2.3 trillion yuan, the largest among China's domestic banks. At the end of June, the Industrial and Commercial Bank of China's green loan balance exceeded 2 trillion yuan. China leads the world in terms of green loan and green bond market. As of the end of last year, green loans in China totaled $1.8 trillion, and the total of green bonds came to $125 billion. So in such a large market, what's going to drive new growth?
Banks can invest in funds related to green technologies so that they can control their risks while offering capital. Since the innovation of green technologies still faces some uncertainties, banks can try to link investments with loans. Banks have limited ability in evaluating the risks of green loans, while equity investment companies or private equity funds have more advantages in evaluating the green technologies. By cooperating with them, banks can lower their risks in issuing loans, relying on the companies making the investments.
The PBOC says regulators are working on streamlining green finance standards, bringing them close to international practice and enhancing information disclosure. These measures will make it easier for international investors to access the country's green finance market, and so to join in it too. Zhang Shixuan Money Talks.